Hello guys, so today we are going to talk about CRT strategy, how to use it, how to take entry, and how to make some money off of it. Okay, so first of all, basically, you want to CRT strategy. Personally, I am using it on the daily and the 4 hour time frame only because you got higher confirmation and higher bias, let's say. Okay, so let's go on the daily. Okay, so we're going to do an example on the daily. Daily time frame is the one that I prefer. Okay, so let's see. So first of all, you wanna find your liquidity like this. Okay, you want to spot it and write it down. And this is basically another liquidity, which is also named CRL, candle range low. And this one is candle range high. Okay, both of them are liquidity. Okay, it's just the name for this CRT strategy. The first candle needs to be, let's say, accumulation, second one manipulation, and the third one needs to be the manipulation, which is going to go towards the CRL. Okay, so once you found your CRH, okay, you want to have this daily candle closing below the liquidity, like this case. Okay, now I cannot drop on the lower time frame because of my replay. Okay, but normally you want to go on the 15 minutes or the 1 hour. Let's just go and see this in real time. Okay, so you want to drop, let's say, on the 15 minute. Okay, so let's just go back. Okay, so this was my sweep of liquidity, which is CRH. That's my candle range high. And this liquidity right there, guys, is my CRL. Okay, you can go on the 15-minute time frame, or you can also go on the 1 hour time frame. Okay, if you want to have a sniper entry like me, it's very simple. So your first step is to write down the CRH and the CR low. You want to wait for either a sweep of the liquidity on the CRL or CRH. Okay, after spotting your sweep of liquidity, you want to wait for a market structure shift, which is telling you, all right, at this place, the market might shift and stop going higher. Okay, so my market structure shift is right here. That was the last low forming this high. Okay, so now we do have our market structure shift like this. Now I want to find my entry. Okay, first of all, I'm always using inducement, EDM, which is a fake out of liquidity to stop the trader. Okay, so here it's my EDM. You want to spot a liquidity before a big move. Okay, so like this. And after you want to take, so at this point, when you just identify your IDM, you know your position will be like, let's say, in this zone, okay, above the EDM, because you want to go swap, let's say, this liquidity, doing a fake out, thinking that the buyer, so people will think the graphic will go higher because it's not respecting uh, the going towards the CRL, but in fact it is because it's only an inducement. Okay, so you do have your inducement, you do have right there your order block. Okay, so your entry would have been like this, or you guys could have entered inside of this fairly gap. Okay, so like this, your TP will have been C or L, and your stop loss, you could have put your stop loss, it's at your own choice. But a good stop loss would have been this one. Okay, so basically the order block, the end of the order block, the end of the liquidity of the order block, which would have been this one in this case. Okay, this would have been your stop loss for this trade. Okay, so stop loss, making this trade a 1 to 5 risk to reward. Okay, so this is CRT. Let's go and check another example. Okay, so right there we do have another example. Okay, so here you guys need to know it work with the session. Okay, so let's say here for me that was like that. Okay, so this is my liquidity, and basically this is my liquidity. Okay, um, after I want to drop on the hourly time frame. So these are my two zone that I want to know. This is my first TP. Here it's your CRH, and CR low. Okay, you want to wait. This is the manipulation right here. Is your manipulation. Okay, that's your manipulation. You want to wait for a market structure shift. So your market structure shift is very simple. Right here, you can find it. That is your market structure shift. Boom, boom. Okay, and now you want to wait. You want to find your EDM inducement. Okay, so you spot a liquidity on the hour. Boom, that's a fake out because most of the trader will have entered inside of this fairly gap, seeing this momentum. They would have said, okay, I'm gonna put break even. Boom, what's happening? Let's say they entered there. Boom, what's happening? Okay, I got a nice momentum on the downside. I'm going to put my stop loss. Okay, the problem is that's called an EDM. That's a fake out to take out some trader. Okay, so here it's your EDM, and if you go um, on the 4 hour, you do have on the 2 hour. Is it 2 hour? Where did I saw it? Uh, 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 Okay, I'm gonna go with my strategy. Okay, so on the with the EDM you can find your trend line after. That's my strategy basically. Okay, but you can use it with whatever you want to see. Okay, that's alchemist strategy. That's my own strategy. Okay, so basically I would have been entering here, stop loss. You could have put it at the high and aiming at some liquidity. Okay, because market move with liquidity. Liquidity is always a TP. Okay, so this and this, making this trade a 1 to this order block, making this trade a 1 to 5 risk to reward. Okay, so this is CRT strategy. Okay, so you guys need to focus on. I personally, I am using the daily time frame and the 4 hour time frame for my analyze, and I'm entering off the 1 hour or the 15-minute time frame. Okay, so each time you do have those signs, these are the best time to take a trade. Okay, with this being said, it was a fixed trader. If you have any question, just make sure to follow me, hit me up, and we'll see about this. Have a good day.